Hi everyone, this is our fourth video on AI in finance series. But before we dive in, let me quickly tell you what this video is about. Okay, in this video, I am going to explain why businesses can be profitable and still run out of cash, how cash actually moves through a business over time, and how modern treasury practices, including AI and automation, help companies avoid cash flow surprises. If you ever wondered where the money goes, when it comes back, or why timing feels off, this video is for you. I am 𝗔𝗓𝗄𝗏, a finance and fintech consultant. Let's get started. So why does cash flow timing matter? Have you ever noticed that some businesses struggle to pay bills even when sales look very strong? And that's because profit and cash are not the same thing. The real issue here is timing. And this is where treasury management comes in. So I am going to use my air traffic control analogy. Think of treasury as air traffic control for money, making sure cash arrives and leaves at the right time, and not just in the right amount. See, treasury has three simple goals. The first goal is liquidity, having enough cash available today, right? Not just on the paper. The second goal is risk management, protecting the business from surprises like interest rate or currency changes. And the third goal is cash optimization. And what it means by that is making sure extra cash is working and not sitting idle. All right. So it's not just about making money. It's about having it when you need it. So it's not just about making money. It's having it available when you need it. Now that we understand the goal of treasury, let's look at how cash actually flows through a business. So what is cash operating cycle or the cash flow timeline? See, every business follows a cash flow timeline, which is also called the cash operating cycle. And it has four basic steps. Okay, so step number one, you buy materials or services. In step number two, you create a product or deliver a service. In step number three, you make a sale. And step number four, you collect the cash, right? But here's the challenge, right? You spend cash early, but you receive cash later. So as an example, what happens on day one? You pay, for example, $1,000 for supplies. On day 30, you sell the product. Come day 60, the customer pays you. Okay, so for 60 days, your cash is tied up while expenses keep coming in, right? And so this gap is called the cash conversion cycle or cash conversion cycle, right? Which is inventory days plus receivables days minus payable days. That's what makes up your cash conversion cycle. The shorter this cycle, the healthier the business, right? So the goal is always to somehow make it short as much as possible. See, the timing problems don't stop there because delays exist even after sales are made. That brings us to float. So float is the hidden delays. Float is simply delay. The time gaps in your cash flow caused by manual processes. Float happens when businesses rely on paper invoices, checks, manual approvals, slow deposits, things like that. So on the way in, float includes invoicing delays, mail time, and bank processing. On its way out, it includes approval delays and payment processing time. Okay. In the past, companies tried to game the system by speeding up collections and slowing payments. But that approach damages trust, right? It damages trust. And so modern treasury isn't about playing games. It's about visibility, predictability, and smarter decision making, okay? Which leads us directly to technology and AI. So how AI and automation change treasury? This is where modern tools and increasingly AI make a real difference. AI doesn't replace treasury teams. It supports them by forecasting cash shortages earlier, right? Flagging unusual payment delays, predicting customer payment behavior, and automating invoicing and payments. Okay, so instead of reacting late, companies can act early. This is where businesses stop making small fixes and start transforming. Don't just improve, evolve. Here is the big takeaway. Cash flow problems usually aren't about failure. They are about timing. Okay? They are about timing. Whether you are a student, business owner, or finance professional, understanding your cash flow timeline is absolutely important. And if you need help mapping your cash flow, modernizing treasury processes, or exploring AI-enabled solutions, please reach out. Thanks for watching. And remember, cash isn't the king, timing is.